what you see on YouTube when people are cherry picking stuff. I do it too. There's nothing wrong with that when you're trying to show an example. But what helps traders more, in my experience, is showing examples that look like normal market situations that are choppy like this. So let's draw this out with the rules that we have from a starting point right down here. So this was our starting point. We're going up impulsive leg to a swing high. We have a swing low to a major swing high. At this point, what are we waiting on? We're waiting on the bottom of the pullback to be our major swing low. This would be the bottom of our pullback. The only reason we know that is because it breaks resistance here. So at this point, the way we would draw this out is to our next major swing low, which is right here. And then the next major swing high, remember, we have to break and close above this high. We actually don't do that until right up here. So this would be our new major swing high. At this point, in terms of uptrend, we know that we are still in an uptrend unless the market breaks below this level of support. So if it helps out while you're practicing this and drawing it, do a horizontal line at all your major swing lows during an uptrend and all your major swing highs during a downtrend in order to be sure that you're still in line with the trend while you're practicing. So at this point, everything that happens in between our new structure high as we start pulling back, this would be our major swing level just because we've started to pull back now by more than a few candles. And if that's the case, after breaking here, when we start pulling back by a few candles, we know this is our next swing high. So we have that as our swing high. Now we're pulling back. Everything in between here is just consolidation. There's nothing that I personally am going to be trying to trade at this point in this consolidation. If I get a deep pullback, maybe I try to trade that, but this isn't a lesson on actual trades. This is just me showing you trends. So in this case, why don't you try to point out what our next level would be? Since we can see price right here, what would our next level be? Our next level would be the bottom of the pullback, right? All of this in between is consolidation, but essentially it's just the pullback of price. It's just relief from our new structure high. After we have that relief, we then push higher. Where do we break and close? Right here on these candles. Do we start pulling back by a few candles afterwards? We do. So now this is our new structure high, new swing high, and this would be our major swing low. Hopefully you're seeing that at the point that we break and close right here, we now have our new swing high. So we're drawing out our major swing levels, major swing, major swing, major swing, major swing, already circled, major swing, major swing. This we know is a major swing once we get a push up and a break and close above our previous level. So the way we would draw that out is like this, swing low up to swing high. At the point that we close above this, right here, we know that this pullback comes to here and this is our new swing high. We now need to break and close above this. Once we do, right here, we know that the lowest low of this is our pullback level, and the break and close of that is our new swing high. Hopefully, this is becoming easier and easier, pointing out swing highs and lows, major swing highs and lows. So at this point, we've been continuing in this trend from our starting point, and although it looks choppy, if you were to trade with this trend, you would have won 1, 2, 3, 4, possibly 5 different trades before eventually the trend ends. And that's something we'll discuss now. Trends do not last forever. They will end at some point. And our first hint, the first hint we have that a trend is likely to end is this right here. Here was our previous major swing low. How do we classify this as a major swing low? Well, we had our pullback to our swing high. The only way we can classify this as a major swing level is after we break and close above this swing high. So once we have that move, you can put a horizontal line here or circle it, do whatever you have to do to understand we're in an uptrend unless this level is broke and closed below. As soon as that happens, as it has just now, here on the Euro Aussie, here on the Euro Aussie, just as this happens, you know that this is a market telling you that it's likely to reverse. This is a possible reversal situation, and after this happens, we're no longer looking for a bullish trade because we're no longer in a bullish trend. If we're trading with the trend, now what we need to see is the market either come up and break this resistance again, like so. I'll move the chart like this in order to show us we're back in an uptrend, and then we can start buying pullbacks again, or the market to come down and break below this support level. Because at that point, we have what I call a 1, 2, 3 reversal move. And if we break this major support level or major swing, then at that point, this would be considered a downtrend. So that was the bullish examples of this. What we'll do now is go to a different chart and I'll walk you guys through a bearish example of all this to be sure that you have a complete comprehension of how to read major swing levels and how to read trending markets in the bullish and bearish direction. So let's head to a bearish example of all of this right now. All right, so again, with a bearish trend, it's really easy to spot markets that are doing this and say, okay, that's a bearish trend. But a lot of times markets look more choppy than this, right? This is what a real bearish situation will look like, and it's choppy. You can't really easily point out major swing levels unless you have some type of rule, which is what I've been explaining throughout this entire video, is my rules for major swing levels. So what we're gonna do is start right here with this being our starting point, our first major swing level. With this being a major swing level and this being our previous level of support, where's our impulsive move end? So what we have is a market pushing down, right? Swing high, major swing high to a major swing low. And once we start pulling back by a few candles, I don't have an objective rule for this. Again, I normally want to see more than 2 candles and a decent pullback. But again, this is just something that'll come with experience. There's no real objective way to identify a pullback. Again, one of the better rules I have is at least 2 candles, and I want to see some movement. I'm not talking about 2 candles like this. This isn't really a pullback. This is just 2 really little candles before a breakout to the downside. I want to see an actual pullback, and I want to see it consist of at least 2 candles. Would be one of the better ways I have of identifying a pullback objectively. So if this was our impulsive move, this is our pullback, what are we waiting for next? We're waiting to see this level of support broken and closed below, because at that point, one, it solidifies that we are in a downtrend, right? If we have that break, then that is a guaranteed downtrend. If this was a reversal move, this would be our 1, 2, 3 move. We are now in a downtrend. We know that for a fact. Awesome. We're in a downtrend. And we also need this level to break so that we can classify this as the level that can't break for us to continue in a downtrend. Because once we have a break of this major swing low, we know that this is the top of our pullback. And the top of our pullback, our major swing level at the top of the pullback, is a level that cannot break if we're going to continue in the downtrend. And if it does break, then that's showing us a possible reversal. So in our case that we have on the chart, that does not break, and instead we get a continuation down with the market pulling back, making another swing high, major swing high. And the only reason we know that's a major swing high is because we get a push and break below this level right here, our previous major swing low. So at this point, what we know is that we cannot come up and close above our previous major swing high, and we need to close below at some point this level. But if the market was, let's say, if I can actually get market replay to work right here, the way we are looking at this in terms of actually placing trades is that we are looking for opportunities to go short or sell the market in anticipation that it goes further down as long as we stay below this level at 1.0851. As long as we stay below that, then we are consistently looking for possible short trades to ride continuation to the downside on this particular bearish trend. Let's see if the play button works now. Not so lucky, so I'll, with the power of editing, show you what happens in just a second. So as this pullback comes up, what we get is opportunities to go short and to ride this trend down, and we will continue to do so again unless this level ends up being broken, which is something that has not happened at this point. And instead of that happening, what happens? We get a breaking close below this level. Again, keeping us in the bearish trend, showing us that this market still has momentum to the downside. We also can now point out our lower high that should not be broken if we're going to continue in this downtrend. There's our lower high here, and this level cannot be broken if we're going to continue in this downtrend. But here is when something a little bit different happens. At this point, what do we have? We have a push down to a major swing low, and then we have a break and close above our previous swing high. What is this telling us? What this essentially means, and we've talked about the mass psychology that charts show us, what this means is indecision. The market no longer wants to go lower because we broke above the previous pullback. So that's telling us that all market participants are showing bullish pressure, are saying that the value of this asset is undervalued. We think the price should be higher. But at the same time, we have a ton of market participants that think the value should be lower by this big move down. All this shows us is indecision. In trading, we call this consolidation. And this is the first sign that we are about to see consolidation and indecision. And also, it's our first indication to not trade. If we're going to be trend continuation traders, this is exactly what we do not want to trade during. This is when all of our losses will occur. So spotting, the first step of spotting consolidation is understanding trend continuation, because if you understand that this is a level that can't be broken, if we're going to continue in this downtrend, then you also understand that it means the market is having a lot of indecision if this level is broken, because we just went from being in a downtrend to being undecided if we want to continue that downtrend. So at the point that we create this move, what we do then is we have a level here that is now our new high. We have a level here that is our previous low. Before I can trade again in this specific instance, I need to see one of these levels break, and everything in between these two levels is just consolidation. It's just minor swing levels until the market shows me that it wants to continue in one direction or the other, like it does right here. So that's showing me now we have defined bearish pressure because we broke below this low, and I can look for possible bearish trades.
There was an in-depth tutorial on how to spot major swing levels and use those major swing levels.
We can find our next swing level before the market pulls back, and then continue looking for major swing levels in order to determine trends in a specific market.
You're going to understand why it was
so important. There's no way to have
as we
this
start to
completely
get into the
objective,
strategy
and it's
itself
something that you will just
right
have to
now.
spend time learning and
For the strategy
understanding.
you're learning